If you want to know what's going on with Tesla, you need to understand these two numbers, which I'll explain in this video. But first, we got to get out of the way what this is not. This drama of Tesla stock falling over 6% today does not incorporate what the heck is possibly going on with X, and I'll tell you, we just had news about that. We just heard that multiple banks were in talks to try to shore up the debt that backs the X/Twitter acquisition deal, and so far it looks like some of those talks have fallen apart. Why does that matter? Well, as most people who invest in Tesla know, Elon uses Tesla. You can't blame him, but he has, and he potentially will again, Tesla as his piggy bank to finance other projects. Tesla has been used to finance the acquisition of Tesla, selling over $24 billion in 2022, which was almost $8 billion more than what retail bought that year. Now, Elon did promise not to sell any Tesla shares the year after, which was 2023. That's over now. Maybe he wouldn't sell in 2024, which is now, so that means we're in the maybe world. But the fact that there's also talk about things maybe not being great, or at least banks having to write down their ownership value of X/Twitter ownership by 60 to 70%, isn't so great when it comes to Tesla news. Because here's the thing. You might initially think, Kevin, why does this matter? Well, it matters because it's kind of like potentially getting margin called. You know, if a bank says, hey, we'll lend you X billion dollars so that you can buy X, Twitter, but it's predicated on loan terms that say the equity in the deal needs to be Y, and all of a sudden X plummets because of user growth or issues or revenue issues, who knows? Well, then you definitely have what we call refinancing risk. And unfortunately, that's not even being talked about right now when it comes to good old Tesla. And I hate to be the bearer of additional news, but consider this. Fidelity wrote down their position 72%. Morgan Stanley, I didn't give a percentage here, but they took an almost $1 billion loss on the value of their portion of the debt. There was about a $12.5 billion debt package when it comes to X. And the group that put this entire package together did hold talks with Elon, it says here, earlier this year, and those talks faltered. So, what kind of pressure comes next? Who knows? Do we really want to know? Not really, because this is supposed to be a Tesla video. So why are we spending the first nearly 3 minutes talking about X? Well, because unfortunately, when the largest shareholder of the company has turned the company into a bit of a piggy bank for other projects, you have to. That's just the way it is. If you don't talk about it, you're kidding yourself. Now, is Tesla dead? Are EVs over? Are EVs the next plant-based food? No. And I want to be crystal clear about that. I was asked that question point blank this morning in our course member live stream, where we do fundamental analysis. Every day the market is open. We talk trends, whatever's going on, real estate analysis, you name it. EVs are the future. There is zero doubt in my mind. EVs will be the future. They are substantially easier to maintain. They are substantially more powerful. They are more capable vehicles when it comes to computer responses with autonomy. Much more fantastic vehicles. The problem is we have time between then and now. Why? Well, because of a few things. Range anxiety, which, let's be real, there are enough supercharging stations everywhere, but people's memory is very should I say, people's memory is very elastic, meaning that once people are convinced that range is a problem with electric vehicles, especially in the cold, it takes a very long time to get people out of that memory hole, right? And in the future, battery technology and battery warming technology will be such that this really isn't an issue, but the reality is yes, range does decline with cold, at least at this point. And yes, certain batteries like the LiPos, the lithium ion phosphates, not to be confused with liposuction, not sure why I'm making that comparison. Yes, those you generally only charge up to about 80%, those with nickel included. There are some batteries that are now the nickel-free batteries, like the 4680s, which you don't necessarily have to only charge to 80%. And the whole point of that is not to have longer-term battery degradation of, 5 to 10% or whatever. The 4680s, you don't have that issue. You could really charge them up to 100%, but still, when you look at Tesla's showpiece for a 4680 product, what do you get? You get a Cybertruck that was released that's maybe manufacturing, I don't know, a couple hundred vehicles a week, which is a far cry of what Tesla put on the financial press release of 250,000 vehicles of capacity. 200 times 52 weeks, maybe we'll deliver like 10,000 Cybertrucks this year. Maybe we can even double that and go to 20,000. But Wall Street's looking for 50,000, and there are people out there thinking it's going to go to 250,000 for a vehicle that sells for $100,000, where they do continue to expand who's getting invites for the Cybertruck, and they don't even have full self-driving for. That's probably the biggest pisser for me. No parking sensors, no FSD. Like, those are all short-term annoyances. Obviously, the Cybertruck is going to have FSD in the future. Obviously, FSD is going to continue to get in the direction of better. And yes, of course, we're going to talk China numbers and all the other stuff, but the point is, right now, what we've got is the glitz of the Cybertruck is behind us because now it's out and it ain't that glam. That's a problem, and it's going to take a while for it to be glam. Instead, in the meantime, you're going to see, as we predicted, this vehicle on tow trucks. You're going to see people complain about it. You're going to see features that are stupid, like no FSD. It's like illogical. I don't understand why you would buy a Tesla and then not have whatever. And then, of course, FSD prices are still ridiculous. I did just get version 12, and I have to say, I'm a little disappointed. Now, I will say it's extremely impressive that it is a neural net trained system. This thing can make U-turns. Like the last version couldn't even make a full U-turn. This sucker will make a U-turn for me. And I'm like, oh, damn, that's pretty good. It'll do things that are great. But I'll just give you a couple examples. Railroad track, red light. This sucker creeps up, sees red light, railroad track, no train, no gate or anything, and it just stops at the railroad track. And then it wants to go like half a mile an hour to get the 30 feet to the stop line of the red light to go make its right turn. And I'm like, bro, I don't have time for this. Again, maybe I'm being impatient, but the old version wasn't that weird. So to me, it felt like getting FSD 12, and this is the first time I've done this in a very long time. But when I saw that FSD 12 update pop up, I looked at it, I'm like, oh, hell yeah. I went straight home, updated that sucker. The moment the update was done, Lord, I'm getting milk. Like, I felt like I was 16 again. I'm like, oh yeah, we're gonna try this out. We're going to the grocery store. Man, it actually handles roundabouts really well. Like the old version, it was like you were going into a roller coaster. You'd go into the roundabout, and then you'd be like, okay, here we go. Whoa! Like this one, because it would like floor it halfway through the roundabout, and it's like, we still have turning to do here. Anyway, this one goes through the roundabout just fine. But for improving that and giving me U-turns, it's ridiculously slow at certain stoplights. And sometimes, I don't know where it gets this idea from, but when it's making unprotected lefts, it wants to cut it really freaking close. I never have had to slam on the brakes with this freaking car before because it was gonna pull left in front of traffic that was speeding. I'm like, that was just my first drive. Just my first drive. Maybe it was an anomaly. Maybe I should have just said, you know what? F it. I'm just going to see what happens. And if I get T-boned, oh well, I'll blame Elon. But then part of me is like, I can't do that. I got 7 kids. So, again, I'm not here to say it's not good. Like, it's so impressive that a neural net trained FSD product can do what it can do. But let's just say if we were looking for something that was going to go oh my gosh, FSD 11 is like 80% of the way there. This is 90% of the way there. It's more like, oh my gosh, 11 was 94% of the way there. Oh my gosh, 12 is 94.5% of the way there. Because while we did go forward, it felt like we also went back, and so we netted out a little bit ahead. So, step in the right direction, but again, practically for users, it's not there yet. Oh well, that's what it is. FSD is just taking longer to get to realization. That's a pain point for the company. Now, remember those two numbers I brought up? Yeah, those don't even have to do with the Chinese numbers. Now, I want to be crystal clear about this. A lot of the Twitter bull community, and I just want to be clear, like after having 7 kids and going through what I've been through with kids in emergency surgery and almost dying, bluntly, I look at these numbers and I feel nothing anymore about anything other than like people. So forgive me if I sound maybe a little calloused. I've been through a little bit here, and I know it could be way worse, okay? So knock on wood. I don't want it to be way worse. I'm just saying, the sample I got, I'm like, oh, okay. All right. So anyway, I'm gonna get unemotional here. Tesla numbers with China. A lot of people right now are arguing that, oh, Tesla China numbers, they're just low because of the shift in Chinese New Year. Please, please, please take the stick out of your high horse's butt. Like, no. Okay, yes, it is true that Chinese New Year this year occurred on February 10th versus January 20th last year, which means the start of Chinese New Year and the end of it was all in February this year, whereas last year is split over 2 months. Chinese New Year 2024 dates. Just pump it in. Boom. What is the Chinese New Year? It's the 10th. So the celebration happens slightly before and slightly after because people go travel to be with their friends and their family and whatever. So yes, probably the 5 days plus or minus are bad for vehicle sales, and those occurred fully in February. So a lot of people are like, well, yeah, you know, the February numbers this year were low because it was Chinese New Year. No. And I will explain why no, because it's actually quite simple. All you have to do is go and add together the 2-month period, okay? The 2-month period. And I'm not even using Doomberg's numbers here. Okay, we can see Doomberg's numbers here because they got it somewhere around here. They talk about EV sales. Here it is. Monday's Chinese numbers, the 60,365 vehicles delivered from Chinese factories in February, were the lowest read since December of 22, so that's about 14 months ago, down 16% month over month, and year over year, the decrease was 19%. A lot of people are like, oh, those numbers are fugazi, you know, because of the Chinese New Year. Fine. And I'll talk about this other 25% number in just a moment. But what do you actually have when you add these two digits together? Well, let's just do it. 60,400 plus 71,400. And then what we're going to do is we're going to look at the 2023 numbers, because just so you know, that total is 131.8 thousand. And then if I go all the way over here, I add together 66.1, 74.4, and what do I get? 140.5. Okay, now this is simple math. 131.8 divided by the old number, 140.5. What do I get? I get a decline over the 2-month period of 6.2%. Yes, that means a company where we were expecting for a period of time 50% growth, and I personally thought, well, I thought that was high. I've generally been in the 30 to 35% growth rate for this company. We are literally now talking 2-month decline compared to the prior year. Now, let's be real. That potential for decline going forward and the decline is actually happening at a company you might be familiar with exposure to China as well. It's a small company that has performed decently over the past few days. You don't want to be bitter over this one or the past few weeks or the past few months or the past year. It's NVIDIA. They too have had negative sales in China. In fact, the Chinese outlook for NVIDIA is devastating. The difference is NVIDIA has been able to offset that with massive growth elsewhere. Tesla is not. Tesla expects about 25% of their revenues to come from China, and unfortunately, with the Chinese economy likely in recession, Xi Jinping thinking that, we don't really need to stimulate more because if we stimulate, that'll lead to frothy growth, and we want long-term growth that's high quality, not cheap growth, therefore refusing to do more stimulus, leaves, guess what? Tesla cutting prices and contributing to more promotions. In March, Tesla, for example, is increasing promotions by $4,807 off of a Model 3 or Model Y if you buy in China in March. In the United States, they threw in $5,000 of free supercharging miles. So the promotionism is continuing at Tesla. Now, there's a problem with that. It's a real problem. When prices decline, you end up running into the paradox of deflation. So I want to talk about that, and then, of course, this negative growth here. I don't want to run away from this negative growth. But before I talk about the paradox of deflation, which is wildly important that you understand this, it is also wildly important that you mark your calendar for June 21st to June 23rd. We've got some insane innovation-based, finance-based speakers coming up that we're going to announce, including some startups that are going to present some pretty sick things. Now, stay tuned for the reveal. Once we actually make the official reveals, we're going to raise the prices, not like Tesla declining prices. We're going to raise the prices of this event. Mark your calendar. It's going to be in Vegas, June 21, 22, 23. It's going to be sort of like an evening cocktail reception party, followed by 2 full days of actually learning how to build wealth in real estate finance, being exposed to innovation, speakers. We're calling it the Millionaire Symposium. I really hope you're there. It's at meetkevin.com. You'll see the banner for it, or it's linked down below. Highly encourage you be there. I want to make this the finance event of the year. And you know me, I'm no BS. We're going to do everything we can to make sure when I touch it, it's always a providing more circumstance. So stay tuned. Okay, with that said, Tesla, with a decline of 6.2% in revenues year over year, how are we going to prevent that from leading earnings per share from declining? Well, maybe we can advertise, oh, but wait, that isn't working. Now, that's not saying Tesla shouldn't advertise. It's just saying Tesla with advertising, and we're still getting a 6.2% decline in revenues. Either the ads ain't working, or the product ain't selling, or both. Or the ads are working and the product's just selling less, which is also bad, right? So that's not good, because now you have to consider what Wall Street is projecting. Wall Street is projecting roughly 28% growth for this company. In fact, if I go to my peg sheet here, it's actually 26.65. Tesla is projecting, here, I'll just throw it up on screen right here. We went through this in the Course Member Live this morning, and this is before it updates to today's prices, given that obviously it fell like 6% today. Numbers just uses yesterday's prices all the time, but whatever. It's formulaic. So at yesterday's prices, which would actually be Friday's, we've got 26.65% growth projected, which puts us at about a 2.4 peg. So if I drop that to 190, it puts us at about a 2.3 peg. Okay, big deal. It's a nominal difference. I personally think there's a risk that growth, based on this Q1 decline, is actually going to, for the next 4 years, average out to closer to 20% than 30%. That actually means Tesla's selling for a PEG ratio of closer to 3, which is pretty hot. The only thing that also has a PEG ratio that's pretty high like this would be, well, like a Palantir at 4.3, but you actually want to see another one, NVIDIA. NVIDIA's Wall Street forecast PEG is 7.46. That's freaking insane. Wall Street, after this year, so when you get to January 2025, you're projecting an EPS of 24.5, which is double last year's EPS, which is great. But from that double on, for the next average of 4 years, the market is expecting 4.5% growth at NVIDIA, which means NVIDIA right now at $822 has a PEG ratio of 7.46. That's insane. Now the stock war today is at 852. If I change it to 8.52, you're actually at 7.73. You could almost round that to 8. It's nuts. So what's happened is you've pulled forward so much growth at NVIDIA that's why the stock is skyrocketing. Now, the problem with Tesla is Tesla stock ran up so much 3 years ago because we pulled forward growth. The problem today is we might not even have that growth. We might actually have a year of no growth, which tanks the 4-year average. Consider this for a moment. If you have 4 years in a row of 30% growth, 30 plus 30 plus 30, you have 120% growth, right? And I understand this is compounded, but I'm just going to get an average annual growth rate. All I have to do is take 120 divided by 4. We're simplifying here. What do I get? Obviously, it's an average 4-year growth rate of 30% per year. And then, of course, to calculate EPS, that compounds, right? Easy math, okay? But what if I now do 0 for no growth 1 year, plus then we get to 30% growth, 30% growth, 30% growth. Well, that's simple. You could do that in your head. That's 90. 90 divided by 4, might not be able to do that in your head, but it's 22.5, which is the number I've written here. And it's based on Q1 figures. So yes, Tesla's peg is actually not that cheap. Now, keep in mind, we have hope. Oh, trust me, there is no shortage of hopium. Oh my God. This Tesla Optimus program? You gotta be kidding if you don't think robots are the future, and you gotta be kidding yourself if you don't think Tesla has one of the greatest competitive advantages, given that they actually have in-house manufacturing for all these freaking robots. You could get a company like Figure AI that's going to use somebody else to manufacture them. I don't really know what their plans are. Maybe those are their plans or what. But here's a startup that basically had nothing a year ago and is now worth like over $2 billion. It's freaking ludicrous, but it's hopium because, you know, oh yeah, there's going to be AI in these robots. Who's going to make them for you? And then what's it going to do? Unload boxes from a container? Well, the only kind of demos we get are, pressure grip, and then wobble for a little bit and set down. But what about when you have to start lifting from high? What about when you have to start lifting from low? Like, the future is there. The future is clear. In my opinion, this is my opinion, it's very clearly artificial intelligence. And it is very clearly humanoid robotics. And it is very clearly electric vehicle. But again, the question is, how much of that can I price in today? The reality is probably not that much. It's wonderful hopium. But again, here, look at the figuring, okay? I want you to look at this very closely. So I'm gonna play it once quickly. This sucker goes to pick up this box. Mind you, $2 billion valuation, okay? It goes to pick up this box, and then it's gonna go walk on over to the conveyor belt. Here we go, come on. All right, I'm just gonna fast forward a little bit. All right, cool, it sets it down. Now, a lot of this can be pre-programmed scripting. It doesn't necessarily mean it's autonomous, but the idea is obviously there. Now, what I really want you to see is, and I'm not sure where they show me the close-up. Here it is. Watch this grip. And when you see the hand grip, I want you to see something very key that happens. Watch. Here. There. Do you see that? I don't know if you saw that. But clearly, if you look very closely, you're going to see this box is empty. You know that because imagine picking up a box with just like 2 fingers putting a pressure point. So you're basically making you're making kind of a pivot point on something, right? And if it's slightly unbalanced, it's going to fall right out of your hands. So you pick up anything like that, it's just going to tip over. Look, I'll take this iPad for an example. If I go to pick up this iPad and I pick it up slightly too far at the front, what's going to happen? It's going to fall, right? If I pick it up slightly too far at the back, what's going to happen? It's going to fall. If I pick it up perfectly in the middle and then I start walking, see, I can't even get it right, and I start walking with it, it's going to have like this little wobble to it, right? Watch that video. Watch that wobble. Boom. See that wobble? Look at that wobble. It kind of got lucky where it pinched it. Imagine there was stuff actually in it. Now, that's Figure AI. Again, it's early. Yes, it's cool. Terminator, this, that. Everybody's excited about it. There's a lot of work to be done here. Now, that doesn't mean it's not technology that's worth investing in. I'm actually bullish on investing in things that are humanoid robot or in the direction of humanoid robots or whatever. Like, I'm bullish on that whole world. But I want to be clear, pricing that hopium into Tesla is not probably going to help us much for our 4-year growth target. So what does the stock market do? The stock market only gives a crap about the next 18 months. So forget your 4-year, forget your 5 or 10-year price target. It doesn't matter. Why is the stock down today? Because over the next 18 months, Tesla's probably looking at negative growth. And I hate to say it. I really hate to say it because I feel like I'm a big believer that, the Fed has over-tightened. Interest rates need to come down substantially. But you know what? I wrote this on ehack.com this morning, and I was very clear about it. I said, look, Jay Powell speaks this week, and what are we faced with? The loosest financial conditions we've had all year. The layoff recession isn't occurring. The New York Community Bank issue is probably idiosyncratic. I talked about all this morning. Like, you can see my detail in that video from this morning. Real estate prices, at least in single family, are stable. In multifamily and commercial, you have problems, but that creates opportunity. And even Atlanta Fed's GDP growth estimate, which just fell 1%, is still at 2.1. So you don't really have this necessity of cuts ASAP. In fact, if anything, the whole AI revolution hurt Tesla, because Tesla has used AI since before the AI revolution. So it didn't really benefit much, I don't think, from the AI revolution. Sure, maybe you get some more powerful chips out of it to help learn or teach FSD a little better. But what you're actually getting is a stronger GDP as a result of the AI spend. And that leads to more jobs, which leads to less urgency to cut rates, which hurts an interest rate sensitive stock like Tesla. So now you look at this company, you go, well, damn, FSD issues, Cybertruck issues, negative growth. The Chinese numbers, I mean, you have to lie to yourself to tell you that they're good. Oh, and then you got the deflation paradox. Why, please, those of you who have watched my channel for years, I say this. I say this over and over and over again. Why is deflation bad? Or at least why do economists think inflation is bad? Because when deflation occurs, people stop spending money because they expect things are going to get cheaper. So therefore, they wait for it to be cheaper. They stop spending, which then crushes the economy. It's what China is going to experience. Oh, great. Tesla's exposed to China. We know that already. The deflation paradox when it comes to Tesla is, Tesla prices are plummeting. Basically, another price cut every so often. All you have to do is wait 2 months and you get another price cut. Why would you invest in a new Tesla now? Just wait. Wait for rates to come down. Wait for prices to stop falling so you don't have negative equity after you buy something. Wait for FSD to get cheaper. So all of that together is not great. Now, sure, it is good that more people have jobs. Real wages are positive. When the economy booms, maybe people will spend more money on vehicles. It is entirely possible that China is just in the dump and the United States is going to blow us out of the water. That is entirely possible. But I'm going to tell you something. And some people are really bagging on this guy, and he doesn't deserve it. You should know Troy Teslike. He does estimates or whatever with the VIN numbers for Teslas. Not very optimistic on US DMV registrations for Q1. So it's not just China. In fact, Wall Street is forecasting 490,000 vehicles to be delivered in Q1, 518 Q2, 540.5 Q3, 573 Q4. That's like 2.1 million, which would represent about 17.2% annual growth, and then 30% from there. But what happens if that Q1 number is actually 450, and each one of those is actually lower? Well, then you're not looking at 17% growth anymore, so you got to write down the stock. So Wall Street is overly optimistic, at least based on these Chinese numbers and Troy's Q1 estimates, which maybe Troy's just wrong, which would be great. But it's possible. You could go, he's got like a Patreon or whatever you could go look at if you want. So then you have to consider, and I hate to say it, but you have to consider the brand. Tesla's not the brand it used to be. Like Elon, hate Elon, don't care, doesn't matter. The fact is, whether it's mainstream media bagging on EVs, or it's bagging on FSD, or it's bagging on Elon's antics on Twitter where he's basically just become a politician, Tesla's brand has been hurt. Maybe one day they can fix it. Maybe they could still go on to be the most prolific vehicle manufacturer that exists. Maybe. But I don't know if that's clear. So sentiment right now could not be worse. And this is compounded by the fact that you've got the attorneys who basically eradicated Elon's shareholder-approved compensation plan, demanding $6 billion of Tesla stock to prevent that from being a cash expense. Now, those attorneys are probably only going to get like 10%, but that's still $600 million. You shoot high to get the news, because then everybody looks up the attorneys and they're like, I want to hire that attorney. It's a big ad. It's a big ask. It's a big ad. It's just part of the game. Ford, by the way, expected to lose $5.5 billion this year on electric vehicles. That's on top of the nearly $5.5 billion they lost last year. Volvo's cutting EVs altogether. Global shipments for EVs are only expected to grow at 25% this year. So it's not just Tesla. BYD is also down, by the way, like 37% since last year with these February release numbers. But that 25% EV shipment number is down from 36% growth last year and 96% growth the year before that. So yeah, EV sales are slowing down, probably because just across the board we're seeing numbers slow. Now, I do have autos numbers. Autos per Goldman Sachs for February did actually beat expectations. This is broadly. Our consensus was 15.4 million in an annualized, adjusted annualized rate, seasonally adjusted annualized rate. We actually hit 16 mil in February, which was actually better than expected, but EV mix stayed stable. So some people are wondering, could this potentially be the car bottom? Maybe, but even if it is, I'm not sure if it is a benefactor or if Tesla is a benefactor of that. Now, I do think that Tesla will survive in the long run. I want to be clear about that. I do think Tesla is going to survive in the long run. But I just want to be clear. Like, there's nothing so exciting where I'm like, oh my gosh, Wall Street's wrong. This stock should be skyrocketing. That's just not there right now. Will that happen in the future? Hopefully. Is it here now? No. So, is that challenging? Abso-freaking-lutely. Does it suck if you're a Tesla shareholder? Abso-freaking-lutely. That's why a lot of people just selling calls on the sucker. It is massively shorted. We know that. So it ain't easy, but it is what it is. So there's your Tesla update. I screwed up and accidentally deleted the ending, so I have to press the button like this, and you're just going to get to stare at me for a little bit, maybe while I pull up the Webull chart. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than househack, nor am I presently acting as a market maker. Thanks for watching. See you in the next one.